The market chops lower as CPI looms. Have the bulls lost their way? This is Invest with Jacob. Okay, guys, so in last week's video, we talked about the fact that the bulls are in a precarious spot, pushing up toward the new all-time highs and the major market top we've been looking for. And on Friday, they retreated back to support and now sit on a major support zone as CPI looms later today. Now the question is, can they hold support? I'll get into that in just 1 second, but first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave Theory to break down the SP500 and the NASDAQ. I highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. All right, guys, with the market chopping sideways yesterday waiting for CPI, let's jump into the chart and take a look. Okay, guys, so here we are on the 1-hour futures chart for the S&P 500. And on Monday, they pushed down. This break down here pushed below a pretty important support area. It's not detrimental to the bullish case just yet, but it is a start of support breaking. So now the bulls are basically up against the wall as we head into CPI, which is typically a decent market mover. And overall, what we're looking at is either we've completed this diagonal structure that you can see on the screen here. We completed it on Friday. Or they still need another high to go, and CPI will likely be the catalyst pushing us up toward that 5,300, 5,350 region I've been talking about to complete this move higher. Now, keep in mind that with the contract roll, prices are about 60 points higher than they were. So when the futures contract rolls over, moves up to the new pricing level, and in this case it was about 60 points higher. So that target is now 5360 to about 5420 on the ES, and that makes it about 5300 to 5350 on the SPX. So just keep that in mind, that on the futures contract we may see 5400 if the bulls are able to push. Now, I'm not so sure about that just yet, because the RTY or the IWM, whichever one you want to look at in that regard, is showing weakness and has rolled over. The NASDAQ also poked through some key support. We are seeing the tech industry start to turn over a little bit. Apple's in trouble. There are a lot of things pointing to a potential top being in place, or possibly one more high and then a top being in place. But this is a pretty major market top when it does top. And a break of this blue support box that I've been talking about now since last week would be a strong indication of a breakdown in the market. I'd still want to see follow through back below these lows over here. But once we see that, that would be a very strong indication that we have a fairly major top in place, if not a very major top in place, just depending on what happens thereafter. So overall, we're looking for the completion of the super cycle up here, either already done last Friday or going to be done soon with another high towards 5,400 on the ES, or a breakdown. And the way we would count this, so currently, if this is the high, the all-time highs, okay, that's going to stick, that's the top, we would count this as wave 3, wave 4, and this is the ending diagonal with wave 1 up, wave 2 down, and then A, B, C for 3, wave 4 down to the trend line and just under it, and then wave 5 back up to the trend line and just over it, and then the breakdown. This selling is typical of an ending diagonal coming to a close, the straight down selling, but they haven't broken support, and I told my room that do not get too overconfident to the short side. Do not get loaded up on shorts unless you have a strategy to deal with another blast higher, because they still have the potential, as long as they are above this blue box, to push us higher in wave 5. So how does that work, or how does that look? Well, in that case, okay, we would have the same basic count where you would have 1 up, 2 down, and then A, B, C for 3. Remember, these are all going to be 3-wave structures because it's a diagonal. You got your wave 4 down, and then this would be A of 5, B of 5, and then C of 5 up, and then the breakdown after that. So from here, we would look for a C wave higher, which would be a pretty strong move, an impulsive type move up toward that 5,400 region on the ES, 5,300, 5,350 on the SPX. That would be the count there. I don't love that count. I don't like that the A wave came all the way to the trend line. That's not typical of this setup. So I do lean that the bears may be starting to take control of the market. There are also some indicators I have showing weekly weakness, which we have not seen since October of last year. And those things all added up tell me that either we've already topped or we're very close to that top. So essentially, the key levels are this blue box at 41.23 to 41.13. They break that. That's a very, very bad sign for the bulls. And then if they can break back over this high at 52.20, that would be a strong sign for the bulls and a bad sign for the bears. Over on the NASDAQ. Okay, on the NASDAQ, we have some very similar looks on the chart where off of our low over here, you have a 1, 2, A, B, C for 3. You have 4, and then you have 5 up to the top. And now they came down and they break very key support here. Breaking below this wave 2 low is a very key break of support. Even though they didn't break it, like push through it and accelerate, they got lower than it, and that's a really strong indication of weakness in the move. And this is so that is more of a static support than a general region. So you can come down and you can hold support two different ways. There can be static support where you have to stay above the number, or there can be regional support where you come down, there's support here, they may come up just short of it, they may go just a little bit past it, they may hit it right on the number and bounce, but they're in the region. On static support, you cannot break the low, and that's what they did here. Indicates weakness in the move to the upside, and doesn't quite invalidate everything just yet, but certainly makes it a much less likely scenario to see the push higher. So for this move, we would count this as wave 5 up here and complete, and then they would need to break the blue box again. Breaking back below this low would be the key. They break through the blue box, we would look for acceleration down to at least these levels, and then if those break, we would look for more acceleration to the downside from there. So the bulls are up against it on both charts. The blue box is the level to watch on the NASDAQ. It's at about 18,076 down to about 18,000. Through that blue box to the downside would create selling. And then to the upside, if they can hold this region and push higher, again, we would count this as 1, 2, 3, 4, A, B, C for 5. Remember, all of these are 3-wave structures because they are a diagonal. So you'd count it as that again. Really deep wave 4 or B wave here, really deep or really big A wave of 5. Don't really like the structure, don't really like how that looks, but they would be targeting the 18,775 area should that happen. So on both charts, guys, bulls are up against it. We're seeing weakness. If we see a breakdown below the blue boxes, we should anticipate pretty strong selling. Guys, if you love the information that I put out in these videos, then you want real-time market updates from me, you need to check out investwithjacob.com. There's a link down in the description. Go ahead and click that link. It'll take you right over to our webpage. Once you're there, check out our membership plans area. We have 2 incredible plans, and they both come with a 7-day free trial because I want you to get in there. I want you to make sure you love it, become part of the trading team, and make sure you enjoy our trading style, you enjoy the room, and you enjoy what we do in there before you ever spend a penny. You can cancel at any time. You have nothing to lose by checking out our rooms. We also have our training material, and we're just about done with our advanced Elliott Wave course. In here, we go through all the complex structures you can see in the market. We go through your advanced fib levels and how they work, diagonal structures. We go through your double and triple threes, the flats, the triangles, all of the different things that you see outside of standard Elliott Wave that can make the market really difficult to figure out. You can see on the screen that people are really loving this, and it's helping them understand these difficult market structures. But if this is too complex or you're just getting into Elliott Wave, we also have our Elliott Wave for Beginners online course. This course is helping real traders make real money and understand the market in a way that finally makes sense. It's so confusing when good news makes the market go down and bad news makes the market go up. And that's because the news cycles don't matter. Elliott knew this a long time ago and knew that key levels were the key to understanding the market and what happened when they held and what happened when they break. Because of this, you have a huge advantage over the rest of the market. The course itself is 25 videos where we go through the introduction, your mindset and emotion, all that kind of stuff, why it works, the chart setup and tools, every tool you need to use along with Elliott Wave, as well as why to use them and how to use them. Elliott Wave for Beginners online area. We go through each of the waves. I break down how to measure them, find their levels, understand where the key levels are, what they look like when they fail and when they break, as well as the theory of alternation, the corrective depth theory, the pivot, everything you want to know about seeing the market in a way that makes sense. The cool thing, guys, is if you don't want to pay for that course, it's included for free in both of our monthly rooms, as is the advanced Elliott Wave course. You get access to all of our training material for free just by becoming a monthly member. In our first room, the Invest with Jacob room, you get all of my real-time market updates, all of my buy and sell alerts, all of your Elliott Wave questions answered, a midday video where I go over exactly where we are in the counts and what to expect, as well as the training material you just saw. We trade the SPY and the QQQ, and we swing in day trades, so we do trade quite often in my room. However, if you're looking for futures trading, individual stocks, income trading, and advanced training, you need to check out PT's Throne Room. In there, you get everything you get in the Invest with Jacob room, as well as futures trading, individual stocks, the income trading method that's killing the market, and PT's reduced risk binary method that absolutely crushes it. He gets you in at a cheap price and get you big multiples on your money, and it's how he structures that trade that's so unique. Something you really have to see to understand, and that's another reason we give you that 7-day free trial. He also started a challenge account where he put $4,000 into an account trading mini ES futures, showing you how to build a small account into a large retirement or savings account. Guys, we'd love to have you in these rooms so we can all make money together. All right, the key takeaways for today: we are still above support, and as long as we are, the bulls are in control. However, the bears are starting to poke through minor support, and through this blue box is a major warning sign to the bulls. As long as the bulls remain over that box, we can target 5,350 to 5,400 for the next move higher. Over on the NASDAQ, same situation applies. We are still above support, so the bulls are still in control, but a break of this blue box would be a major warning to the bulls and should accelerate selling to the downside. Guys, that is your market update for today. I will talk to you tomorrow.